Alright everyone, so welcome to another video. This video I will be talking about how to trail your stop loss. Now it's actually more of an add-on to my previous video on how to leave runners. So this is more like of a freestyle, I guess you could say, of leaving a runner slash trailing your stop loss. So you'll see what I mean in a bit. Now if you haven't seen the previous video, then you must watch it before looking at this one, because if you don't, you're probably gonna make a bunch of mistakes and you're gonna start blaming me for it. So please watch that video first. I will leave it linked in the description below. Now, without wasting more time, let's begin. Okay, so let's just use this as a quick example. I'm on the 90-minute time frame, as you can see. Obviously, I cherry picked this example because, well, why not? So let's just say you had all the confluences for your setup, right? So we're just going to pretend this is like some kind of rejection block. So let's see if we can find it here. Okay. And then you decided, you know what, I'm going to enter off of this candle because you saw price going back towards the upside. Okay, great. Now let's just say you don't actually have a profit target set in stone, but let's just say you want to leave your take profit open to trail and to get as much money as you possibly can. Okay, cool. So this is what we're gonna do. I'm gonna leave this on. So now we have our bullish and bearish fair value gaps, right? So let's just say we're going to use bearish fair value gaps and bullish fair value gaps to tell us where price is going to go and how far price might retrace to and where it's already retraced to. So we're going to let price play out. And what we're going to do is just let market structure tell us where and when to move our stop loss. So you can see price is moving. Price ate some of this fair value gap up. So I'm just gonna mark it up real quick. And as you can see, it started eating away the bearish fair value gaps here. So now we're headed to the upside. And then what else did we see? After it ate that fair value gap, what do we have? A break of structure. So it tapped into this fair value gap, created a new break of structure, and ate into the bearish fair value gaps because now we're in a long, right? Now another thing too, guys, is the higher the time frame, the more reliable these things can be. Why? Because let's say if you were on the 1 minute, this fair value gap, even though it might have already been tapped into once or twice, on the lower time frame you risk this type of structure not holding and actually reversing and probably tapping back into it or into this lower one right here. But since we're on the 90-minute time frame, it's higher likelihood that that won't happen. So what we're going to do is, now that we have that break of structure, we're just going to move our stop loss. We're going to move our stop loss as if it were up to here. So you know what, this is what I'll do. I'm gonna say this is, pretend this is now the stop loss, right? So that is now going to be our stop loss. Okay, we're gonna use it as a way to trail it. Okay, so our stop loss is now under this fair value gap. So what we do, we let price play out. We let it play, we let it play. Okay, looks like it already ate some fair value gaps. Now notice it ate this fair value gap, came back down. What did it do? Tap back into this one and tapped into this one right here. Now let's see what. Now imagine if I would have moved my stop loss under this low. Now the reason why I kept it under this fair value gap is just in case price does decide to come back and tap into it, just in case. So we're gonna let price keep doing its thing. Beautiful. Now what do we have? another breakup structure. So remember guys, anytime you're proactively moving or trailing your stop loss, you want to be as safe as possible. So even if you are going to trail it into for value gap, don't put it in the 50% or the top edge, which is this edge, right? Don't do that. Be very careful, okay? Because like I said, this could happen at any moment. So now that we have another breakup structure, guess what I'm going to do? I'm going to move it either here or you can move it up here, but you risk of price coming back into that order block and tapping into it. So what I'm going to do, since this order block already swept liquidity and there's no fair value gaps here, I'm just going to leave it under this one. So slightly trailing it a little bit more. Now what I'm waiting is for another breakup structure. Now check this out. You'll notice how this fair value gap was respected, and then we got a new breakup structure. Okay, cool. So now I'm trailing my stop loss here. Now if you had an original take profit, it already got hit, right? It already got hit. But what we're going to do is try to keep trailing, right? We're going to try to keep trailing. So let's see. Let's wait and see what price wants to give me and do. Okay. So what do we have here? Another fair value gap that got respected. Beautiful, right? Now, some of you might say, well, why not trail it up to this fair value gap? Well, we're already at an extremely high point. Price already tapped into it twice, right? But it did not do a deep tap or a quick rejection. So not only did we not get a deep tap into this fair value gap, but price didn't necessarily reject off of it very quick as this one did, right? Look how quick this candle tapped into it and then rejected off of it. See? So now what I'm going to do is move my stop loss here, because I want to keep it under these order blocks and this fair value gap, just in case. Now we're going to target more fair value gaps. Okay, price might reverse since we didn't break structure towards the upside. Okay, there we go. Nice. So thankfully it did not tap into it, and since I see that it's respecting it, I'm going to show my stop loss. You know what, I'm going to be more aggressive now, even though I don't recommend it, but I'm going to be more aggressive just for this example. Price respected this order block. I'm going to use this one. And then price also created a new breakout structure. So where are we at now? If I would have closed this position now, I'd be at 3.67 R. Right? Now let's keep going. And another thing, guys, if you want to trail on the lower time frame, scalp on the lower time frame, but trail on the higher time frame. And this is what I mean. So if you entered, like for instance, on the 5 minute, if you enter somewhere here on the 5 minute and you see market structure doing its thing, right? It's breaking structure. I still wouldn't trail with the lower time frame structure. I would rather trail with a higher time frame structure. In this case, we're using the 90 minute, right? So trail on the higher time frame, because if you start trailing on the lower time frame, you risk price tapping into an area that you trailed your stop loss into, as opposed to doing it on a higher time frame, which can save you a big mess. So we're gonna keep going. We're just waiting to get stopped out at this point. All right, we're seeing fair value gaps getting disrespected and respected. We're seeing fair value gaps getting eaten up. So let's see and wait to see what price wants to do. Now, guys, this is an extreme example. I don't ever want you to get too greedy. Don't get greedy, guys. Realistically, no one's actually going to ever trail this far, but I only did it to show you guys the different ways and how I would proactively trail it. Now, you would have been just fine trailing it at like the first break of structure, maybe second break of structure. That would have been more than fine. But if you're someone that just for some unknown reason just wants to get that runner as far as you can, then this is how I would recommend you do it the most safest way possible. But realistically, I don't do that. Nobody really does that. I mean, unless you're leaving like the world's smallest position open. But I would rather you practice safe risk management and get your psychology intact, all that good stuff. And again, watch my previous video if you haven't. It will help out a lot. But again, guys, I hope you learned something from this. I hope this video was a bit of a gem. If you have any questions, let me know in the comments down below. And you know, if the questions are fairly substantial, then I'll probably make another video on this, or a remake with your questions in it, or maybe I'll just edit it and, you know, add it onto it or whatever. But yeah, guys, that's all I have for you. Again, leave your comments down below, and I will see you guys in the next one. Thank you guys so much. God bless y'all, and let's make some money.